The Mark the Magician, that's the case one. Mark is the professional magician from British Columbia, known as engaging performance in unique stage presence. Currently, he performs various events, including the corporate gatherings and weddings. To explain his brand and reach a broader audience, Mark is considering a partnership with the social media team to enhance his online visibility, increase booking and grow revenue. He is seeking your guidance on his accounting, uh, uh, as his accounting consultants will help him with analyze the options and make most financial sound decision. So first, what you can see here is the partnership comes. So definitely you have to discuss benefits and drawbacks having partnership. How good is that to have the partnership? That will be one thing right there. Social media team offers three possible payment options. Now, for all the three options, obviously you have to prepare the calculation. First, Mark could pay them monthly fee of 1,000 due installments. Second, he could pay them the discounted one-time fee of 10,000 of cryptocurrency, providing him with 10% discount and pay. Lastly, his team can offer 5,000 installment in exchange of 10 investment in 10% equity stake in Mark's brand. This would give a social media team a small ownership interest, aligning their financial success with the business goal. Mark is unique, unsure which options would provide the best balance in the cost and risk control, and he's seeking your advice, potential advantages, disadvantages of each. So basically, you have here 6 things that you have to discuss, to do here. First, calculation of each of options, that's 3. Discussion of each of the options, that's another 3. So you have option 1, two things you have to do. Option 2, 2 things. Option 3, another 2 things. You have to take the calculation and then discussing how this actually is going to help me. Or your discussion is clearly identify advantages and disadvantages. If you have less than 3 advantages and disadvantages, you're not going to get 4 marks. So 1 partnership, 2, 3, and 4 calculation, 5, 6, and 7 discussion with advantages, disadvantages. Now, next thing, Mark charges per show, which is the premium rate that reflects his highly quality performance. He typically performs around 5 shows per month, generating that monthly revenue. His per show variable cost is that much, which including 50% supplies per transportation. The 5 shows per month. His total variable cost is up to that much. Additional Mark has fixed monthly expenses, home-based business. So here you have information you to prepare the budget for Mark. If Mark proceeds with the social media partnership, now if we go with this partnership, which has this insight, has 3 available options. So it's expected to double his monthly bookings now you see you're preparing. So here you have to prepare one budget of what he making in the current condition. That's number 8. Then you're preparing another budget if he goes with the partnership where he's gonna be, and then compare it. If Mark chooses to move forward with the studio setup, he'll need to purchase equipment, furniture. This includes professional lighting. That's another scenario here. That's number 10 that we have. He plans to use the straight line depreciation method, which give you the expenses. So whether he would like to calculate annual depreciation expense for the studio equipment and explain how this expense will affect his income and taxes over the time. So basically, we need calculation 10 and explanation on depreciation is clearly communicated with you. There shouldn't be no confusion on what you have to calculate and what you have to explain. And what you have to explain. You have to explain the effect on the net income first and taxes second of time. Mark would like your help calculating the break-even point for his business under the both scenarios. So once we have the both scenarios, which are the both scenarios? Both scenarios if he working by himself, one, and if he move forward with the social media. Those are the two scenarios. Actually, is it that if Mark chooses to move forward with the studio setup? Yes, those are the two scenarios. Where is the break-even compare one to another? Mike would like your help to calculate the break-even both in the both scenarios. His current home setup, base setup. So now he gives you an explanation about the fixed cost. How many shows he will need to perform each month to cover the fixed and variable costs under both scenarios, assuming his show remains that much. He's also exploring the possibility of sourcing a cheaper props that will reduce the variable cost show from 70 to 56. He asks that you help him assess how this cost reduction will affect the profitability and whether it's worth pursuing. So basically you have here 12 is break even. Then once you calculate the break even, you have another scenario here. If the cost goes down, what's going to happen? 13, and then comment on your results 14. Marx outlined the preliminary cash budget for upcoming year based on the expectation of 10 shows per month, which will bring monthly revenue in both base setup and monthly. Mark worries about the potential cash shortfall during the month of the fewer booking, which might require additional funding. He's considered a line of credit of interest of 55% monthly. For for months when the revenue is lower. 5% is annual interest, but for the months when the revenue is lower, only for those months. So don't calculate, it clearly says annual interest is 5% for the months. So don't get snowed, but the 5% is monthly. Interest is not, it's monthly. Mark asks you to prepare the cash budget. So you have to prepare cash budget with cash coming in, cash coming out. That's will be number 15. And calculate the interest cost if there any, when is the shortfall. As Mark's booking increase, he expects the revenue sources to become more varied, with the payments coming in cash, online transaction possible cryptocurrency if he choose the cryptocurrency payment option. So basically, if you go on the cryptocurrency options up, then if you recommend that as a possibility, then you have to here discuss it. If you disregard it on the first option, then you're fine here. He wants to ensure that his business expenses remain clearly separated from his personal expenses. So basically, here you have to discuss what's the potential problem of flipping personal expenses into business. Is that appropriate? Is it not appropriate? And he's not familiar with internal control. So in internal control, internal risk, you can discuss any of potential risk that you might see and see which control is evaluated. Is it document? Which control you should implement? Document control or human resource or internal verification? Whatever you decide, you have so many opportunities here. Mark, recognizing that as his business grows, he might need additional internal control to manage the cash flow and expense accurately. He particularly concerned about ensuring the personal and business expenses, separate business payments. So basically, you have to decide which level, which control procedure is going to fix this problem. If Mark accepted the social media team or equity offer, this is the third option on the equity option. Remember, here you have 1, 2, and 3. Lastly, he offered 5,000 investment in exchange 10%. So if he go with that direction, then you're going to this one, social media offer. He will need to record his investment accurately in his financial statement. He asks for guidance on recording equity contribution and understand how they impact the financial position including the effect on his balance sheet and the retained earnings. The only thing is that company is going to have access to his retained earnings. That will be number 16. And if you go with the internal control, that's 17. And internal control, first to identify the process and provide the recommendation, that will be 18. So many things you can have. You have so many options here to get your marks. Process with the line of credit. If he proceeds with the line of credit option, he also needs a sample journal entries to record the both principal interest. So basically, you are focused here on the recording versus versus anything else discussion. So Mike is looking for your help to ensure that any financing equity decision are properly reflected on his account. And Mark, looking forward for your assistant recommendation, the following: calculate the break-even point for both business scenario, create a reliable cash budget, analyze the financial options, implement internal control, establish sound method for revenue expenses tracking. He hope that your expertise will give him a clear path forward growing the brand sustainability responsibility while having financial complexes and his business expansion. The ethical problem that you might want to see here is the flipping personal expenses into business. So be careful. I want you to implement that ethical, so you have that element of ethic in the case. So you can clearly identify and discuss around 18, 19, 20 issues, separate discussions. So you have a lot of room here to play. How much I expect, I'm going to tell you in the class what exactly you have to do and what is expected to do. So don't waste your time. Divide your work. Start working on the group one, or whoever have case one. Start working on your case one. It's an interesting case. There's a lot of sounds like a lot of calculation, but the calculations are very simple. And now when you have the Excel spreadsheet that I gave you on the budgeting, those calculations should come right away. That's case one.